This is the Syndicate Room, an AI-generated podcast from AdValorem Syndicate. Everything about this show, the voices, the scripts, the production, is created by artificial intelligence. We believe AI content should always be clearly labeled.
This week might be the most consequential week for energy markets since the 2022 Russian invasion of Ukraine.
Brent crude hit $83 a barrel. The Strait of Hormuz disruption threatened 20% of global oil supply. Gas above $4 a gallon. Dow dropped 400 points. And Goldman Sachs warns that if the strait stays closed, $100 oil and $3.50 gas.
But Chatham House says even a long war would have limited GDP consequences, maybe half a percentage point of additional inflation. So you have Goldman saying catastrophe and Chatham House saying contained. Who's right?
Both, probably. Short-term shock is real. But medium-term, the economy is better positioned than 2022. U.S. domestic production is higher, strategic reserves exist, and critically, alternative supply sources become viable when prices spike.
And this is where it gets interesting. One alternative supply source is Venezuela. Heavy crude, previously locked behind sanctions. As Iran escalates, Venezuelan energy assets get renewed attention.
The Venezuelan energy story has three layers. Sanctions easing creates the legal pathway. Oil price spikes make heavy crude economically viable. And the grid infrastructure desperately needs modernization, which is the investable opportunity.
It's not about drilling more oil. Venezuela's power grid is barely functional. They have the reserves, the crude. What they don't have is infrastructure to extract, process, and export reliably. That gap is the investment.
AdValorem Syndicate has a Venezuelan power infrastructure fund structured around this thesis. Not speculating on oil prices, investing in physical infrastructure that needs to exist regardless of where Brent trades.
All right, shifting gears. Ray Dalio was on All In and basically said the U.S. system is in jeopardy. Debt crisis worse than people realize. 5 forces reshaping the global order. America heading toward collapse.
National debt at $36 trillion. Interest payments now the largest single federal budget line item, larger than defense. And all 5 of Dalio's big forces, debt, internal disorder, great power conflict, natural disasters, and tech disruption, all flashing red simultaneously.
The tech disruption force is key for our audience. AI is restructuring industries so fast that social and political systems can't adapt. SaaS stocks imploding is one industry. Multiply that across every sector.
Dalio's prescription: diversify into real assets and alternatives uncorrelated with the debt cycle, which is the argument for alternative investments in a single sentence.
When the traditional 60-40 portfolio is at risk, where do you go? Venture positions, warrant portfolios, energy infrastructure, pre-IPO access, things uncorrelated with public market chaos.
Let's talk warrant investing. AdValorem acquired warrants covering over 1,000 startups from the new chip accelerator bankruptcy. You pay pennies on the dollar. If 95% go to zero, you lose your cost basis. But if 5% achieve meaningful exits, the portfolio returns can be extraordinary.
It's optionality at scale, and their accelerator warrant enforcement platform systematically extracts value across the portfolio. Legal infrastructure, valuation frameworks, exercise strategies.
If you want to learn more, AdValorem has a full education library at gp.advalorem.io, and the syndicate is open for LP applications. Investor dinners, Discord, Angel List, Substack.
Also check their daily insights section. Institutional-grade analysis every morning covering AI, quantum, pre-IPO, litigation finance, energy, blockchain, and portfolio strategy.
That's the Syndicate Room, Episode 3. New episodes, Monday, Wednesday, Friday. AI-generated podcast. The voices are synthetic. The market doesn't care who's talking, it cares who's right. Subscribe, and we'll see you Monday.
See you Monday.